Semiconductors, the rally blows my mind. I'll say that right now in my 27 plus year career, I've never seen anything like this. Even in the dot-com bubble, it was never as ferocious as I have seen, where stocks that are already 500, 700, 800 billion dollars are going up intraday 10+%. Incredible amounts of upside. Now, again, is it a bubble? Certainly. There's no doubt in my mind. But the question remains, when does it finally end? And we don't know that, frankly. We don't know that. And what I will say is the technicals right now are not working because the emotion in the market is driving it up so quickly. Let's be fair. The levels, the parallels, blown right through in this irrational exuberance. But let's get into it. We're going to go through all the charts here and everything. The first thing right here, folks, this was your day on the S&P. It really was a lackluster day, right? We had this little gain in the first gap up, 3 bars up, and then the rest of the day we went sideways. So it really was not a tremendous move. The gap up, a combination of slightly lower oil prices. Again, oil coming down a couple dollars. It seems to give the market juice to the upside, but then when oil goes up, markets don't really fall. On the other side, we also got the non-farm payrolls report. It was stronger than expected, and the market breathed a sigh of relief because essentially people have been worrying that the high gas prices are hurting the consumer, hurting the economy. And at least for now, we didn't see that in the jobs data. Now, we all agree that later this year, could we see revisions right back down? Sure. The next year, when they do the full revision, they could easily revise it down, but the market doesn't care. As much as you and I don't necessarily trust the numbers, if the market's reacting like this to the numbers, then that's what it is. That's just what it is. So let's go back to the charts. Let's flip over to the daily S&P. You can see we're now a week out from breaking above the parallel. The parallel to me now is now technical support to the downside. If ever we break below it, I think that's where the floodgates really open up to the downside. But right now, we've now, again, held above. If you zoom out on this chart, we were below over here, but only for a few days. Then we got back above. Same thing here. We've never been above the line or below the line of the parallel for this long. Again, do I still expect to pull back in the markets? Of course, just because markets, when they get this extended, there's going to naturally be a retrace. But the question is it a retrace that puts in a bear market, or is it a retrace that pulls back to technical support and then goes even higher? And we don't know that yet. That's what the charts are going to tell us. Now, for me, I'll be watching very crystal clear this line, right? So we knew this line was incredible for literally 6 years. So what this means is when we come back to it, that's going to be some support. If we break below and stay below, let's say for a week again, now I think you get your bear market. As long as we hold here, then you got to assume the bull is in charge, or the bulls are in charge of the day. Okay, just the nature of the beast. Now, how high can we go before we hit our next resistance? Very simple here, and this is something I showed already. We're basically into this line, so we did kind of kiss a little resistance, but I want to be clear, hitting resistance hasn't mattered, at least in this bull run here. So yes, absolutely, you take your highest point here, going back to the bull market high of 2025, right? This was early 2025, before we had our dip for the liberation tariff sell-off. We connected to our highest point here, and that gives you the high of today, literally to the penny. Now, again, I'd love to sit here and tell you guys, oh, this market will get smoked right back down, but we honestly just have to wait and see, right? And the answer is that the momentum in this market is so insatiable that sure, it might get rejected, but I'm not as confident on that rejection until we see technicals start to work again. All right, now they will work again once reality checks come back in and money starts behaving more normally. But right now, this is a run for anything. Buy it all, buy semiconductors left and right. That's what kind of market we're in right now. Same thing on the NASDAQ. We bring up the NASDAQ composite, and what we see, again, a great day. So while the S&P was only, and by the way, the S&P was up 0.8%, so it was an okay day. NASDAQ 1.7%. So that was a great move. But look at the Dow Jones today. Dow Jones Industrial Average. The Dow Jones was barely green on the day, only up 12 points. Now, what does this tell us? Does this tell us that the rally is broad-based? No, it doesn't. And so, I mean, I want to be clear. There are warning signs, right? The breadth of the rally is very weak. All right. But it's still a rally because you have companies that are 5 trillion Nvidia, 2 point something trillion Broadcom, Taiwan Semi 1.8 trillion, whatever it is. You have Micron, which is now an $800+ billion company. Intel, which is now a $600 billion company. These companies, when they go up 10% in a day, you could have every other stock down and the markets are still going to be flat to positive. Now, we didn't get every stock down today, so obviously markets were up a little bit. But when you see the Dow down or flat, Dow was up 12 points today. 50,000 index, 50,000 point index, 12 points, basically flat. Number one, that's more defensive names. But number two, the S&P's lack of performance with the NASDAQ tells us that the broader market was weaker. So again, still a market we must respect with the move here. Got to respect it. But there absolutely is a run for semiconductors that is literally, because now you have over $15 trillion in US listed semiconductors. I mean, think about this. The US GDP is 30 trillion. So you're telling me the semiconductors alone make up half the entire economy? Maybe they do. Maybe they do. Markets say they do. But again, if you look at the rest of it, it's not as rosy. And you can go through the list today. I was looking at banks were down today. We had a bunch of other ones. No doubt a run for the semi trade, the AI trade. All right. So again, we'll continue to watch it going back to the NASDAQ composite here. And by the way, it's interesting that the Dow has not made a new all-time high while the S&P has. But look at the run now. In 5 weeks, 27% move in the NASDAQ. That is absolutely stunning. And again, it's the only time this vertical move has occurred at this magnitude where we've hit new all-time highs. It's never happened before in the markets. And again, I think that is remarkable to think about. All right. Number one, the 10-year yield today on the back of a jobs report that was reasonable. So a lot of people are now saying, wow, the Fed might have to hike rates. Not going to happen. Listen, they're not going to lower rates either. They can't. Not with inflation jumping because of oil and a strong jobs report number. I mean, strong is arguable. It was over 100,000, but it wasn't like it was 300,000. But the answer is there's no way Kevin Warsh, being appointed by Trump, is going to raise rates. Now, he's not going to be able to lower rates. The other players on the panel of the Fed governors, won't let him lower rates, but he's certainly not going to raise it. And I think the market knows that, right? So if we go to the 10-year yield today, 10-year yield was down slightly on the day in spite of the move in the markets and risk assets. Now, not all risk assets participated. Bitcoin barely higher today. Now, Bitcoin, again, has achieved my general target zone of 80, 85,000. Again, I've moved out of my Bitcoin. I've sold a few more altcoins today, took some profits there, but I'm still holding a few altcoins just in case we get that one big pop to finalize this mega risk asset rally. But I'm certainly getting more cautious on those. There's no doubt about it. All right, let's go to the chart here of, let's see here. So let's look at Intel today. I mean, look at this Intel move, guys. Middle of the day, you can see it here on the 10-minute chart. They basically inked, I believe it was a deal with, and I'm just going to my thing, Intel struck a preliminary deal to make chips for Apple after year-long talks. So again, we had heard this rumor already that had sent Intel up. But the way this market works, even though Intel already gained like 20% on that rumor, it gained another 15% today on that deal. It's just the nature of it, folks. This is the market we are in. When it's good news, you're getting 1, 2, 3 multiple days upside, the rumor, the actual news, the follow through. And then on bad news, the market's saying, who cares? Buy them anyways. And you could see that because some of these semiconductors reported mediocre to poor earnings, like CoreWeave, right? CoreWeave was down today. But what we've seen, CRWV, by the way, I mean, this thing actually got hammered today, down 11.4%. But we also had other stocks out there that dropped on earnings, like ARM Holdings. And ARM Holdings, same thing. It's kind of down, but it's barely down on those bad earnings or subpar earnings. So again, people are buying any dip, even if it's on earnings that are not the best out there. And that's just the nature of the type of market we are in right now. All right. Where else do we go? Let's go over to gold right now and take a look at gold. Gold up ever so slightly today. Notice how gold was green on a stock market up day, but it's not screaming. And that continues to be a little concerning to me as it's really behaved like a risk asset. All right, silver, same thing. Silver, little bit of a close to retest of 82. Now, next week, if silver can get through 82, it can go to 92 to 93. Okay. Same thing on the downside. If it starts to fall and takes out 71, it should go down to 64 to 66. But again, right now, this is resistance on silver. Now, in terms of trading silver or gold, they've basically gone to sleep. Like, I want the volatility. That's where I am going to look to trade. And right now, we don't have that volatility in the charts. All right, looking at oil again, I mentioned oil, folks. Oil was down a little bit today on the back of, again, this is one of those things where one day we hear that, oh, shots are being fired between ships, Iran's firing on the US, and and oil goes up 1%, right? And then we hear, oh, but maybe there's a deal, and oil drops 3%, right? And the markets get this big move to the upside. In reality, the Strait of Hormuz is still closed, but the market goes up beautifully when that oil price falls. It doesn't really fall when oil goes up. Now, that could change at any time, but what that's telling you, it's the psychological nature of the market right now. The money that's searching out is saying, I don't care about bad news. All I care about is focusing on good news, and therefore I'm piling into the market relentlessly. And that's just the way the market is right now. Okay. So that's oil. Natural gas today, guys, didn't do much, down just a little bit. I continue to have a small long in natural gas just because, again, I think it's beaten down compared to oil on the charts. I'd love to see next week it take out the $3 level. If it can, I think it can get a bigger pop there. And then Bitcoin, we already discussed Bitcoin, but again, Bitcoin just got a minimal little uptick today, nothing much. And really, again, I would just point this out. Gold didn't do anything, flat to positive. Silver didn't do anything, flat to positive. Natural gas didn't do anything, flat to negative. Oil was down fractionally. Bitcoin was up fractionally. Dow was flat. S&P gained a little bit. Where was the momentum? Semiconductor, chip stocks, tech. That was the momentum right there.
If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.